Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market up 4% we're still down year to date, 3.2%. We're still down from the highs in February, 7.6%, but we are up from the lows in March, 39.9%. So this past week, we saw overall positive news in the market, and the main market mover was actually the jobs report coming in on Wednesday into Thursday, and also some of the other, auto purchase report and the home purchase. So overall, some pretty positive economic news. So Rich, do you want to briefly talk about the jobs report?
Yes, we're still looking at tremendous unemployment at 11%, but that's down from being over 13, almost 14%. In addition, a lot of jobs were created, over 4 million. They weren't expecting that many the week before, I should say the month before, I think it is. It was 3 million something, now it's 4.5 million. Some of the issues within the job report are that a lot more people in industries where they're closed due to coronavirus, such as various retail industries, are looking at permanent job loss versus furloughs. However, we're seeing a lot more people being hired in delivery, warehouse, etc., because more people are buying things online and they need more warehousing and they need more delivery people. So it's been a mixed bag, but overall it was very positive.
Yeah, what we're seeing is a shift in the market. So obviously at the beginning, when everything shut down, we had a huge rise in the unemployment rate, actually to levels that were even above the 2008 recession. But what we are seeing now is the industries that have to stay closed. So like Rich said, retail, travel, entertainment, sports, all those industries, they're not hiring new people. However, in other industries like consumer online shopping and warehouses, we are seeing actually uptick and increases. Even in the technology space, we're seeing a lot of increases. And this is due to, if you think about it, before the coronavirus, these huge companies were limited by the amount of space that they had in their office. Working from home wasn't a thing. And now with Facebook coming out and saying that they'll allow their employees to work from home permanently, that opens up a whole new realm for them to hire new software engineers and just allow them to work from home. So we're kind of seeing a shift from the industries that are still struggling and are going to continue struggling in the coronavirus until we have a mass-produced vaccine. We're not seeing new hiring in that area. But these other industries that are actually starting to pick up and thrive, we've seen the NASDAQ hit new highs. So these technology companies are hiring. They're actually producing more output than they have been. And so it's been this mixed bag. And right now the market is really trying to figure out, what are we going to see? Is the labor market going to recover in a faster pace? But just these new jobs are going to be completely different than what we imagined before, and it will just look like a completely new labor market.
Very good points, Knight. Also, if you think about it, without having to have offices and paying for offices and having people work at home, the actual cost per employee to bring them on is a little bit cheaper. And if you have to downsize quickly, you're not also looking at paying rent for extra space. So there are a lot of variables that go into this that bring some savings to the high-tech companies.
Yeah, so it'd be really interesting to continue to watch the labor market as we go forward. Right now, the past 2 months, in May, they were expecting to lose jobs, and we actually added jobs. And then in June, they were only expecting to add, 2 million jobs, and we added 4 million. So right now we are beating the economic expectations. Want to, keep tracking that as we go forward. And especially as these new wave of jobs, these new jobs are filled with, you know, the top talent in that area. What happens when you start seeing people who aren't qualified for those jobs? Are they getting new jobs? And are we going to, you know, see a slowdown? I think my expectation is we'll probably still see, you know, double digits until the end of this year, and then probably, you know, high single digits, you know, for most of next year, but slowly trending down. Rich, you have anything else?
No, I think you brought up really good points.
All right, well, great. As you know, this weekend is the 4th of July. I have my 4th of July attire on, and we just hope that everyone has a lovely and safe weekend. I think it said something like 60% of US households are doing a barbecue. So if you guys are doing a barbecue, have a wonderful time. Make sure you're still social distancing and staying safe. And as we always end, your money's meant to support you. We are meant to support you. And we'll see you again next week.